Most traders start by looking at charts and manually entering their trades. In this video, I will show you how you can go immediately from emotional manual trading to automated systematic trading, all using Python. I'll explain why Python is great for algorithmic trading. I'll show you an actual live demo of the code we use for trading in our own hedge fund. And we're going to offer you a link to a free workshop that's coming up where we'll talk even more deeply about these topics. What are we going to talk about specifically? Well, I want to talk to you about why Python is great for algorithmic trading. You may have heard it before, but I really want to show you today, show you the code. I'm going to give it to you. We're going to show you how we do it for real. So my partner and I are running an algorithmic trading hedge fund. We have built all the infrastructure using Python, and we're going to show you how we execute trades today in this video in just a minute. We're going to talk about a lot of the mistakes that using Python for algorithmic trading helps you overcome if you're coming from a discretionary trading background, why it's a great idea to start using Python to systematize and automate your trades. And finally, we'll give you the link to the 1-hour live workshop where you can get even deeper details in what we're talking about today, learn the entire end-to-end workflow, and get the workshop view. Quick disclaimer, this is not financial advice. Nothing in this video is financial advice or a recommendation. The content is strictly for educational and entertainment purposes. Always do your own research before making any investment decision, and always consult a qualified financial professional for investment advice. So who am I? I am Jason Strimple. I'm the co-founder of Quant Science. Me and my partner, Matt Dancho. Matt Dancho is the machine learning data science guy, quickly becoming a great quant, and I am the quant and quickly becoming a great machine learning guy. This is one of many videos in a series we're going to do about our journey in building a Python-based quantitative algorithmic trading hedge fund. We run real trading strategies using Python-powered systems. That's what this series of videos is all about. And we want to help you learn how to build your own mini quant fund. Whether that means raising money or even trading a small account, doesn't matter. You can do this with Python. And I'm going to show you how we are executing trades today. But first, let's talk a little bit about Python for trading. It's really great. If you're new to Python, then Python is a multi-purpose programming language that you can do a lot of different things with, including quantitative finance, algorithmic trading, machine learning, data science, even things like bioastronomy, etc. It's a great language, very, very broad. And the greatest part about Python is it's really easy to learn. The reason I like Python for trading is because it integrates with this large ecosystem of tools, and you'll see some of that today. Want to run a machine learning based strategy? That's what we're doing, and we're using Python to do it. Want to run real-time streaming data? Well, we're doing that too, and you can do it with Python. Today we're actually going to talk about the code. And the reason we like Python is because we call it a hedge fund in a box. What I'm going to show you today is a library and some code that allows you to automate the trade execution. Set market, limit, stop limit orders. You can order by target percentage. You can order by target value. We have automated trade logging in a database. So every execution you make, it lives in a local database for later analysis. Intraday streaming data, so you can stream your P&L, calculate risk metrics, send yourself alerts. We'll see that too. We have automatic position management, all sorts of canceling. We can cancel orders, we can size orders, all these different things, all using Python. Streaming the data, we already talked about that. We'll see how we can pull down historical data. We get 1-second resolution data, and all this allows you to rebalance, trade, manage risk, size positions, all automatically, all from Python. So how are we actually doing it? I want to give you an actual look at what we're up to. And just a quick introduction. So we are running our own hedge fund, and it's completely based on Python code. And what you're looking at is the actual P&L, one of the tear sheets that we're running. The date is probably about 9 months now. The blue line is our actual account. The green line is the S&P 500. So we've been doing quite well. We have a live demo. It's a workshop where we go way, way deeper into this than just in a YouTube video. I'll give you the link in the show notes. You can join us for free. There's zero cost, no obligation to join at all. But really, we want to do this to show people that you can build these systems with Python. In this series, my partner Matt and I are showing you under the hood what we're actually doing. And today in this video, we're going to show you the code that we're running to actually execute some trades. So we use it for automated execution, for real-time market data. The system that we're going to show you today is event-driven architecture. That means that every time you make a change, the code is updated. You've got obviously the direct connection to the account. All the executions are traded and stored locally, so you can track them in a database. You can do analysis for later. Before we get to that, why does this matter to you? Well, a lot of the common mistakes that I see discretionary traders make go away when you're using an automated system. The first is just the manual process in sizing your trades. If you're trading frequently, you probably have an Excel sheet open with your account value. You got to type in your account value. You got to type the percentage of your account you want invested in a particular stock or futures contract. If you're trading futures or options, you have to compute your margin. Some of the more sophisticated platforms, of course, will give that to you. But you can automate all of this with Python, and I'm going to show you that. With automated execution, you get rid of all the emotional trading. All the emotional trading goes away. Getting into a trade is very easy. It's the getting out that's very hard. Right? You're up some money. Well, I could be up more money. Or you're down. Well, it'll always come back. These are the things we tell ourselves, and leads to issues, or even worse, bankruptcy. The third thing is the manual trade execution. So going into your trading screens, figuring out what size you want to trade. So you've got the spreadsheet open, you figured out the number of shares or contracts you want to trade, or the option, and then you put it in the account. And then getting that detail out of your account, plugging it into Excel, trying to figure out how to manage your risk. All of that is manual and error prone and painful. And it, let's be honest, prevents you from doing it. Who's actually practicing good risk management? I am, because it's all automated with Python. Okay, well, let's take a look. So I'm going to open up a Jupyter notebook and go through some of the code that we're actually using. I'm going to flip this over here so you can see my actual trading account. All right, so what you're seeing here is my interactive broker trader workstation, and you can see I was just doing some testing earlier. This screen here that you've got with the green bars is just my data connection screen. So you can see that I am connected to the data farms, but I'm not connected with Python. So I want to first start by importing the libraries, and just a few libraries from Omega, which is the software that we use, the library that we use for our execution. We're going to start the event loop. So what the event loop gives us is asynchronous support. So that means that we can run these asynchronous calls in the background. And if you don't know what that means, don't worry. It's just a really nice feature that we built into the software. Now, once I connect just this one line of code, boom, and we are now connected. So we have an open connection to our trading account. And I've actually looked at what's in this thing. These are all the different methods and properties that we have available to us to interact with our account, right? Account summary async, event, give me account values, bar lookup, bracket orders, calculating implied volatilities, canceling orders, canceling P&L, canceling streaming data, all the connections, getting the bid, the ask, the forward front month futures, market pricing, market data, midpoint options change, P&L, news, open orders, statuses, these are all my orders. So these are all the different ways we can actually make orders, send orders. All of this information is available to us all through Python. We've got scanners, we've got screeners, all of this stuff, streaming tick data, streaming L2 data. And again, if you don't know what any of this means, don't worry, it doesn't matter. It's very, very full featured, however. So let's just start by showing you all the account values that we can get. So this is typically a problem for people. I'm going to move this over here just to show you. This is usually a problem, right? Like imagine if you needed to get your the account value or the buying power or cash balance in the account, maybe in your base currency, maybe in a different currency. So I have a $28 euro balance in my account, even though my base currency is US dollars, okay? All of this information is available to you now in Python. So the margin cushion is available to you. The day trading status, when are the last trades that you had done? Excess liquidity, margin requirements for commodities, for stocks, all of that detail is here. So this is a great way to manage your account algorithmically, right? If you start hitting margin requirements, let's back off. If you start getting low on cash, let's raise some cash. We got an unrealized P&L, we've got realized P&L. All of it is here. Now let's just say I wanted a single account value, which is what most of us want. Boom, you just add a tag, and then all of a sudden you've got net liquidity by currency, $52,000, $52,545 is the account liquidation value. So cash plus liquidable securities. Cool. That's very useful for calculating position size. Well, what about positions I actually have in the account? Well, we can get those very easily by calling positions or positions as symbols. And boom, these are the ticker symbols I currently have in my account. This was the contract object. So this is a list of position objects. Gives you the account detail, the contract. So the contract gives you the contract ID, which is the Interactive Brokers ID. The symbol, the exchange, this is the Pink Sheets stock. The currency it was traded in, local symbol, trading class, expert. So you got to be an expert to trade this Pink Sheet stock. The position, so I'm short 54 shares, and my average cost basis is $1.59. And you get that detail in each one of these. What about P&L? So we can actually stream real-time P&L. So I'm going to request to open the P&L stream. I'm then going to go every 1 second. Let's do maybe 20 seconds. I'm going to request the P&L. I'm going to print it out. I'm going to wait 1 second, and then I'm going to do it again. So this will just stream P&L right to the screen. So the way that we use this is in the background in a thread. We are running this. And if we start to get to a particular level of P&L that we don't like, we will start to execute orders to get out or maintain a position. Okay. So you're seeing this daily P&L. This is unrealized P&L. This is total unrealized P&L. So on the whole, this account is down, right? You see unrealized minus 1.8K. So it's minus whatever that showed, 1793. That's what this number is. The daily P&L is what I've done today. So this account is up $2,545 today, or 5%. And that's showing, and you're seeing that updated in real time. So, and when you're running it in the background, you can actually do things. So say I hit a daily P&L of minus $5,000. I don't like that. I will start sending alerts or ceasing trade. Just go through and define stock contracts for NVIDIA, Palantir, and Amazon. And then I'm going to call a function called get historical data for many, which gets 1 year of daily data. And this is actually trades. So most of the time you go to Yahoo Finance or something, those prices are trades. You can also get midpoint, bid, ask, etc. And the cool thing about this library, Omega, like I mentioned how Python, you can interact with the Python ecosystem. This actually gives you a pandas data frame of the data. So now you are right in the tools that you know. Pandas is a great data manipulation tool that we use all the time. Okay, so let's actually do an order. So I'm going to move this back over here. And the way that this works is you have to define an order, a contract. So stock, future, whatever. We'll see futures in a second. You define an order. So at its basic, right, I've got a market order to sell 1 share. That's kind of what I was doing earlier. And then I send the order. So I send up the contract, the market order type, and then I've got this raise on unresolved. So that basically means if I try to send an order for something that doesn't exist, it's going to yell at me. It's going to say could not resolve contract. It's just a safety feature. And this really helps because sometimes we fat finger things and we do things that we don't want. So in this case,
order filled.
I just sent the order. And if you blinked, you missed it. But you can see that I just had a trade in. So why don't I do it again in case you missed it? Let's put a sell order. Let's put a sell order for, what's my position? So my position in Palantir 77 shares. Let's sell 100 and we'll actually go short. Oops, I'm on the wrong side. So let's say sell 100. And after this transaction, I will be short 23 shares, right? So ready?
Order partially filled.
Palantir short
Order filled.
23 shares. Okay? So you're seeing how easy it is to execute orders with Python. And of course, if you've got your entire toolkit with you, you're doing all of the analysis and you're figuring out the number of shares to trade, etc. We can obviously do limits. So let's do a buy limit for, let's put a buy limit in at 23 shares to even out our position. Palantir is currently trading at $185. Let's put a limit order at, say, 185. Okay, so boom, there's our limit order. We're not filled because the current price looks like it's 185.32. At least that was the last traded. I don't know what the bid ask is, but we're just sitting here with an open limit order. Don't want the limit order anymore.
Order cancelled.
Cancel it. This is the trade detail. Every time you execute an order, this is all tracked in our underlying database, which I will show you in a couple minutes. All right, so let's do something a little bit more interesting. We are going to create a futures contract. So this is for the S&P E-mini, or excuse me, the S&P E-mini. And we've got a buy order for one contract with a limit price of 6,600. And I've got another limit order in for 6,700. So a lot of people like to manipulate their limit orders up and down. And obviously you can do this algorithmically depending on your analysis, right? I'm just showing you how to do it manually. So I sent in an order at the limit order of 6,600. Let me actually just take this off and I'll create a new cell here. And there's my buy limit for 6,600. And let's say I don't want that buy limit anymore. And actually Interactive Brokers canceled it because I don't have the margin for it. If you go up here, you get the information, okay? So it automatically canceled that order for me because I don't have, right here you can see status canceled, message error, order rejected. The available funds in your commodity segment are inefficient to cover the change in the margin requirements in your commodity segment should this order execute. In order to obtain the desired position, your commodity's liquidation value, 17,082, must exceed the new total initial margin of 17567. Pretty amazing, right? So this stuff automatically checked for you. And in my case here, my order got rejected because I'm like $500 short on the S&P. Back when I was doing this before, I was trading at 59 and 5,800, and I had the margin. The S&P futures are up 1,000 points since then. Pretty incredible. In any event, what would happen if that order were in? If I actually put this in, I can kind of show you this. I can update the order. So I will cancel the existing order and I'll create a new order. And you'll see two orders go in. So the 66 goes in, 6,600, that's canceled, and then the 6,700 goes in, okay? So my point in showing you this is that you can alter and update orders based on your analysis. And then finally, I'll show you the execution history. So I'm gonna move this back over, and what you're looking at is a Pandas data frame with details of your executions. So if I go to executions, this up, these are all the fields that we're tracking in the database that you have access to in Omega. So all of the IDs, so the execution perm order client ID, these are all from the exchange, for example, the commission currency, the timestamp, the account number, symbol, exchange, side shares, price. All of this information comes down for you and it's saved in a local database accessible to you in Pandas. Finally, we disconnect. And if I show you what has happened to my screen, you'll see data and I am no longer connected. So that's how easy it is to trade with Python. And this is exactly what we're using in our algorithmic trading hedge fund that we are using every single. Okay, so just to recap, we talked about why Python is really, really great for algorithmic trading. And I showed you a quick demo of the code that we're actually using in our algorithmic trading hedge fund. If you want to join us for a free workshop where we will talk through all of this in much, much more detail, take a look at the link in the description. You can register. Again, there's no cost. Okay. So next steps, subscribe to the channel. We're doing a whole series of these between myself and my partner, Matt, and we are going under the hood of our hedge fund. That is the whole premise here. Going under the hood of the hedge fund, showing you how an algorithmic trading hedge fund works, and we are doing it with Python. We're going to talk about risk coming up next in one of the next episodes. And if you want to learn more or you want to hear a specific video, give us a nod in the chat. Let us know in the comments what you want to hear, what you want to see. And as always, give us your feedback. Cheers.